Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Tuesday, the 4th of November. Starting with the FTSE 100, where last Wednesday there was the ironic fear that Keir Starmer claiming credit for a record breaking stock market could mark the top of the market and be the kiss of death. And so far, actually, that's just about been the case. We're down to approaching the old initial October resistance, which was 95.77. And day closed below that, and we're looking for potentially a move back down to the 50-day moving average area and the floor of that channel there from June. And I suppose that could roll out over the next week or so. In terms of getting the market back on track, we're probably looking at really getting back above 96.50, which was support on the way down. DAX is next, and here the charting position hasn't been great over the recent past. The market getting stuck at that resistance line there from the beginning of last month, which I drew yesterday. That was around 24,200. And we already had a falling 50-day line, which has been falling for the last couple of weeks, in fact. Those are sort of sell signals in their own right, or at least the 50-day line was. And also, we've had the market struggling near the RSI 50 level. But whatever the case, now we've gapped down through the 50-day moving average there at just under 24,000, and also now below the floor of that rising April trend channel. Fear was that we'd have to test the 200-day line there at 23,300. And at the moment, while we remain below the 50-day line, that seems to be the risk for this market, especially with that RSI 50 failure that we've had there. Next on the list is the Dow, and here, obviously, still with yesterday's charting position. Here we've managed to fail just below the top of the channel there from May last year, so 48,300. The risk now is that we have to test the initial October resistance of 47,000. As a minimum, worst case would be we test the 50-day line, 46,200. But the moment, still above the previous peak there for that market. Moving on to the Bitcoin situation, and not good, I think, is the best way of describing it. We managed to fail at the 50-day line, fail at the 200-day line at 109, and now below the floor of the rising trend channel from March. So that's around 106. Below 106, probably the way things are, especially with the RSI 50 failure that we've had. Looking for 98,000 and the June support, really. Get away with anything higher than that, I think, would be quite a result, especially given the way that if you look at the price action since September, it basically is sort of head and shoulders with two right-hand side shoulders, just to give this situation extra bearishness at the moment. This stage only back above the floor of the channel there, so a minimum around 106 would start to flip the thing around positively. Ethereum is next, and here the fear was always that we might have to test the August support there and the 200-day line, that area around 33.30. We're a bit above that at the moment, but obviously not very far away. And below that, then we've got the horror story of having to maybe go sub 3,000 on this market. Once again, RSI 50 failure, or below actually RSI 50, and we already had a low RSI 50s failure to start the latest rot after the failure at the 50-day moving average, currently 41.25. So looking for a test of the 3,300 area, worst case down below 3,000. To get back out of jail, we'd have to be back above 3,700 on the old April support line, which was broken in the last 48 hours. Going on to gold, and here it's been a sort of consolidation at the better levels, but starting to struggle here, especially on the wrong side of 4,000. We've got that top of the old price channel there, which is currently around 39.50. Above that, we've got a chance of heading back to resistance on the way down at 41.70, but has to be said that this market looking a little bit heavy, and the prospect of hitting or testing the 50-day line there at 38.34 cannot be ruled out, especially while we're on the wrong side of recent resistance around 40.40. Moving on to the stocks, and rather ominous in the sense that we've only got a few stocks to look at, and that tends to be a bit of a signal on the state of the market. So First one is Artemis, and here you can see that had a ricochet off a rising 50-day line, also bounced off the bounced off neutral 50. So we're looking for a retest of the zero point 0.6 plus, zero point 0.6 pence plus peak of last month, and looking for that to happen, hopefully before the end of this month. Ideally, we stay on the right side of 0.4 pence. Whatever happens, GEO is next, and here we've got a situation where we bounced off an old target line there around 0.25. Above that, rather simply, we're looking for a 0.45 second target line, which was obviously exceeded at the beginning of September. If you're cautious, you wait for an end of day close back above the 50-day line at 0.34, but obviously that would be giving away yet more of the potential upside, even though we're looking for 0.45 or perhaps even more. Harena's next, and here reviving itself and reviving itself in a good way, in the sense that we've broken back above the 200-day line there around 1.85 pence. Above that, and we're looking at the top of the channel there up to 2.5 pence. Given the lay of the land and rather spiky price action, probably 2.5 is the best destination to go for while we're above that 200-day moving average. The next stock is HUI, which is Hydrogen Utopia, and here a decent announcement. Obviously, the market continuing to not give the company the benefit of the doubt on this KSA foray, but we are back above the 200-day line there at 1.6 pence above that. Looking for 2.75 pence maybe by the end of this month. Back, by the way, that we've had 3 RSI 50 rebounds, which is pretty strong stuff. And also we've had support coming in above a rising 50-day line. So let's call that a sideways shuffle. So still expecting some kind of spike like the one we saw back in June while we're on the right side of the 200-day line. Stock that's been kicked and punched in the recent past has been Mast, and here you can see, though, that we're trying to stage a fight back. Recent resistance around 34 pence. That's what we've been looking for, above the mid-teens, basically, in that support line there from back in July. So up to 34 pence is the best case scenario target. Probably won't get all the way there, but the was worth mentioning as a potential target, given the way it does seem to be quite a lot of pressure here with those small candles, daily candles on the chart. Finishing off with WH Ireland, which had its abortive deal with Oberon. Here you can see there's been quite a fight back, actually, and like that sort of sideways move into positive candles. The 200-day line there and the top of the channel there from September at 2.15. And that's what we would have as a best case scenario target while we hold above the floor of the channel there, 1.3 pence. You can also see the RSI has been skidding along the neutral 50 level, which is also a positive. That's it for me today. More updates tomorrow.